We've seen some dramatic sell-offs in recent days on both sides of the border. A lot of the weakness is coming in Canada recently. Here with me is Paul Taylor, Chief Investment Officer, Asset Allocation for BMO Global Asset Management, to dig in a little bit and find out what's going on and what he recommends investors do these days. Thanks for coming. I was wondering, as a place to start, maybe you could tell us what you think really is going on these days. What's changed?
Well, the market's obviously selling off in a big way. The Canadian market, you did mention, Canada in particular, is down. At the high, we were up about 16%. We're now up 6% for the year. So it's a 10% correction. So we technically, at about 10%, you're in a correction. What's happening is we have the markets are being spooked as a result of concerns about the pace of the global economic recovery. We've got 4 major markets, and only one is really working, and that is the U.S. Data out of the Eurozone in particular is weak. Japan is kind of mixed, and China certainly is weak as well. So you have that backdrop. You also have the specter of the U.S. Federal Reserve Board moving interest rates up higher at some point in time in 2015. And this is a volatility we've been waiting for, or that we've been expecting would occur at some point in time.
So it sounds like there's really some fundamental weakness that's emerged, or a little more at least, in the last couple of weeks or days?
Yeah, well, I think the market is recognizing that the recovery in the core Eurozone is still not firmly rooted, and we have not seen substantive action on the part of the European Central Bank. And so, every data release we get from the Eurozone is a bit troubling. And it does confirm, how absolutely fragile I use this term loosely, the recovery in the Eurozone is, because they really are flirting with dipping back into recession.
So what are some of the things you and your team have been doing and are doing?
Well, in our portfolios, we did have definitely a risk-on allocation in our portfolios. We were pretty much maxed out in equities in most of our portfolios. And then within the last 2 to about 5 months, we've dialed back our equity weights somewhat. So for instance, with our high net worth platform, BMO Harris Private Banking, we did about 2 months ago, we reduced our equity weight and actually principally our Canadian equity weight from the maximum allowed to a still an overweight, but a lower overweight. We certainly feel a risk-off trade is warranted or has been warranted. We still think we need to look beyond this. We did last year at almost exactly this time. We had an equity market correction, and then following that, the period from mid-October to December 31st, the U.S. equity market was up 11%. We think most of the backdrop is still in place, and that being still a strong U.S. economy. We think, though, the Fed, will intervene. It'll be gradual, and there'll be liquidity support for the market. The one area we're just a little bit less bullish on is valuations. This equity market correction is healthy in that it gives the market a little bit more room to grow as we go forward.
So where are you seeing the best opportunities today? Canada, the U.S., somewhere else?
First and foremost, we would say the U.S. equity market. We feel that the U.S. equity market will benefit from, again, that strong U.S. economic recovery, or stronger economic recovery than elsewhere, even here in Canada, but certainly more so than the Eurozone and Japan and other areas. So first and foremost, with the U.S. Equity market, we do still believe that the U.S. dollar will firm as well. So as Canadian investors, it pays to have assets in U.S. equities and U.S. dollars. And then the other market would be the Eurozone itself. This weakness, we feel, will warrant action from the European Central Bank, and with them intervening, they're kind of where the U.S. was about 3 years ago. And so we see better value, they trade cheaper, and we think they're at the point where they'll get monetary policy support, and European equities are, from a valuation perspective, more attractively priced.
Great. Thank you so much for coming in today. For the Financial Post, I'm Jonathan Ratner.